Stock trader explains a trendline stock trading strategy. Stock trader explains a trendline stock trading strategy. Let's get started. We are on the monthly chart of Accenture Limited. The epic is ACN, and we want to discuss a stock trader explains a trendline stock trading strategy. All right. So this is an American stock, all right, and the strategy is very simple. We want to talk about, the talking points are, dynamic fair value, all right, or dynamic equilibrium price level. What do I mean by that? You see, when a financial instrument is going up or down, but is rotating, or is riding, a trend line. So, for instance, financial instruments going up around a bullish trend line like this, that bullish trend line represent a dynamic fair value or a dynamic equilibrium price level for that particular, stock, futures, currency, gold or silver. This is a dynamic, a fair value or a dynamic equilibrium price level. If you look on this chart, this stock Accenture Limited, I hope my pronunciation is correct. You can see that the red line here, the price is going around this red line, red trend line. Therefore, this red trend line represents what we call a dynamic fair value, a dynamic equilibrium price level for this Accenture Limited, a Russell 1000 component, all right? But as you can see, from this point onward, the price start rotating around, the orange trend line on my chart. Here it is, you can see price was rotating around that, orange trend line. So the red trend line, which was the first dynamic fair value for this stock, has changed. Now we have a higher, a more dynamic fair value equilibrium price level for Accenture Limited, Now, how do we trade that as a technical trader? So what we are discussing also is about another talking point is also to do with market geometry. So now, when we're talking about market geometry, we are talking mostly about the projection of channels, horizontal channel, or is the projection of rising channel, projection of declining channel, projection of angles, projection of patterns. All right. So here we are. We have now the red, dynamic fair value for this stock, and also the orange dynamic fair value for this stock. So you can see that those two lines, those two trend line has crossed here. We have an intersection point here. We can go on and on and on talking about market geometry, but I will not go into too deeply into this because this is quite a new subject for many traders out there, and they may be wondering, George, this is just a mumbo jumbo. But as I said to traders before, when you come across a subject or a topic for the first time, do not rush to make a quick conclusion. The best approach, in my view, is to take it in, as we say, sleep on it, think of it over time, and sometimes you may see that it makes sense. Don't rush to a quick conclusion when you discover something for the first time. Because usually the person who is talking about it may be working on it for some time, maybe trying different experiments, working on it for some time, and here it is, it come out of the blue and exposing it in a public place. But this is a shocking matter for people because many people are not aware of what's going on for some time. What is he talking about? And people will quickly discount it or even, criticize the person for no reason. And a few years later, everybody discovered that what the person was talking about is true. All right? So at the beginning, everybody believed that the earth is flat. That was the first belief, that the earth is flat. And then we found out the earth is round. Another belief was that, the sun was going around the earth. That's the first belief. And then until suddenly we have discovered that in fact it's the earth that was rotating around the sun. So the same approach I adopt all the time when I see sometimes I watch videos on YouTube. A person may be talking about something that maybe I'm not aware of it before, and then I will be saying, what's that? But I have an approach, which means I just look at it and I say, okay, all right. And then you sleep on it, think of it, and sometimes it will make more sense, okay? So what we are doing here is quite new to many traders, so I need to warn you about that. So we see the angle between the red trend line and the orange trend line. So what we need, we want to measure that angle. You see this angle here? So here it is, this is the angle here. What I want you to do is to have the same, you see this distance from here to here, project it directly on top of that. So you see what I meant is this. So you see this is the angle here between the red trend line and the orange trend line, and I want you to project it, okay, the same, you see the same distance, just project directly opposite. What do I mean by directly opposite to that line? Because it should be in one line, vertical line, so the projection should be directly opposite to this line. If you put it here, it's not directly opposite to that line, because the angle that we have here, okay, I'll move my line a little bit, I need to adjust it, should be equal, all right, and it should be on top of it directly like this. Don't put it on another point, put it directly on top of, okay, that the first measurement, okay? And then what I want you to do is to draw another trend line through the intersection point of the first two lines. You see the red line and the orange line, that's the intersection point, that's where I put my vertical line. And I want you to draw a trend line connecting the intersection point and the top of the projection. So this point here and the top of the projection right here. Now we have a new dynamic, okay, a fair value, another dynamic equilibrium, a price level. But you can see that it's a projection of the orange line, okay, into the future, all right, using the angle between the red trend line and, okay, the orange line. This is a market geometry in another dimension if you accept that. But now you may say to me, how useful, how can we, practically speaking, as a day trader, as a swing trader, how can I use that? Now, the point I want to make to you here that we have first the red line, which was a dynamic fair value, okay, dynamic equilibrium price level, a dynamic trend line that is representing a fair value, technical fair value for this stock, Accenture Limited, an American stock. Now we have a new dynamic, okay, trend line that is representing another dynamic fair value or equilibrium level for this stock. Those two lines form an angle. We project that angle directly on top of it, and we have a new trend line by connecting the intersection between the first two lines and the top of the projection right here, okay? So that what we are looking for is that, because this is a projection into the future, we can do exactly the same thing below, which means I can project it directly opposite to it like this, okay? All right, and then I will draw another line, okay, like this, connecting the intersection point and the lowest point of my projection. Intersection point. Okay, this is about technical drawing. If you have been doing a technical drawing at school, here it is in the financial market, we can use technical drawing. So what am I saying? I'm saying to you that if this stock now start going up and hit the edge of this projection, this trend line here, we will see some reaction. The price may find a resistance on the edge of the projected trend line here. This is a forecast, okay, so to speak, a forecast, okay, a dynamic fair value, dynamic equilibrium price level for this stock. Is it making sense? So a projection to the future on the upside, which is bullish, projection to the downside, which is bearish, if it's going down. So I can have this line on my chart, all right? And if the stock is going up all the way and hit this level, I will monitor the reaction of the price on the edge of the new dynamic projection. So what usually happens, the price may go from here and go to this line and start rotating around my projected dynamic, okay, a trend line. So you will see, so as you see from the red line, okay, the price switch to the orange line. It may, okay, talking about probability, it may go again up to the new trend line, if I color it now into turquoise, okay, into the new trend line, into the future, and may rotate around that dynamic, okay, trend line. We want to know where, so this is a forecast into the future. Where are the future, okay, dynamic, okay, trend line? Where are the future dynamic price level? So those are, okay, the first one is here. We can keep projecting that. So if you are projecting it, it has to be on the same vertical line. Are you getting the message? So you can't project it now here like this wrong. It has to be directly opposite to the first one. If you're going to do it again, you just need, don't change the size, because if you change the size of this measuring stick, it should be equal to the first one here, and it should be directly on top of it. And then if you keep going up, it should be directly on top of it. You can draw a vertical line and move that measuring stick along that line. Is it too difficult for you? Okay, so if it's difficult for you, it means that probably you haven't done, okay, technical drawing in the past, all right? So you want to make sure that it's on the same vertical line and you are moving it along. So you can put the vertical line on the side here, just move it along, and you can connect the intersection point here into the top of the projection to know where is the new dynamic, okay, fair value for the financial instrument, okay, that you are trading. You will see that some stock that are quite bullish will rotate around a dynamic trend line for some time, as you can see here, okay, for how many years? For since 2003 up to 2009, 2008, this stock was rotating around the red line. So here again, it switched to the orange trend line and was rotating around it from 2009 up to now. It's still here, rotating around that or dynamic okay, trend line here. So if it start going too fast, which means if the volatility start increasing, it may go to the next dynamic trend line. Another thing that I want to highlight to traders is that the prime will sometimes prefer the median line between the two lines. So you see between the red and the orange line, we can also draw a median line through those levels. So we call it the intersection point, and we put it gently to put it through the middle of those two lines. But the line should always cross the intersection point between the first two lines. So I have my median line between the orange line and the red line. You can see how the price came here to retest it on the edge here, boom, up, hit the orange line, try to pull back near the blue line. Here it is. This will allow us to pinpoint the hot spot trading zone for day trading, swing trading, and position trading purposes. We can also forecast where the price is likely to go in the near future or the possible or future dynamic price levels. Here it is, the orange turquoise line for the bullish zone and the blue one here you can see for the bearish zone, and we can keep projecting it. But remember, if you are projecting it, should be on the same vertical line and should be exactly the same okay size like the first one between the first two trend lines. Remember, very critical, because if you move it to the side, you are distorting your forecast. It makes sense? It is also powerful. Another thing I want to clarify here to traders, because that's why I say to you, be careful. If you come across something new for the first time, don't rush like people were criticizing the first time somebody discovered that in fact is the sun, is the earth that was rotating around the sun. Everybody, the people were killed, okay, for saying that well, it is the earth that is rotating around the sun. People were killed for saying something that was true, in fact, because the general belief was that the sun was rotating around the earth. Well, here we are again talking about market geometry, talking about a dynamic fair value. We are talking about dynamic equilibrium price level. We are talking about a projection of trend line, something new, completely new for traders. And what we usually see, trader will discount it and say, never, never again mention something new like this. Who are you to speak like this? All right. But my intention is to explore some subject that people have never talked about, and it's very important, okay, to see what's going on, because the number one technical indicator is the price. So we can play with the price to forecast what is likely to take place. All right. So Remember that the price can pull back. So if you have all this line here, you see how it pull back. Pay attention to the median line, so we can draw another median line between the orange trend line and the turquoise line. Okay, so now we can have that also on the chart. All lines should cross through the intersection point between the first two lines. So here it is, that vertical line here should pass there. And we want to adjust it to make sure it divides the two trend line into two exact angles. Is it correct? So something like that. So now if you push it, we want to watch the median line also. You may see sometimes the price will be moving around all these trend line, and those are representing, okay, the dynamic fair value, okay, for the stock that we are trading. There are many things that we can do with, okay, a dynamic trend line, all right? If you have any question, all right, or suggestion, all right, put in the comment section, and this will allow me to go over, okay, and record another video to answer your specific question, all right. So do not watch this video and you may say, George, I disagree, or I'll find something like this. Put your comment there, and so we can keep the discussion going, and so I may keep recording more video, okay, to show you more things what we can do with the simple trend line. A simple tool, but a powerful technical indicator. We can combine this method with the stochastic oversold, overbought. We can combine this method with Fibonacci extension in order to pinpoint or set target. Okay, so if you buy here, your first target, we can use, okay, the next trend line as our profit target zone, because those are dynamic, okay, fair value, all right. So one thing you want to understand, you want to know when a financial instrument is oversold. A financial instrument is oversold when, okay, there is no more demand to sell it after it deviates, it goes below its fair value, all right. A financial instrument is overbought when it went too far away from its fair value, all right, and there is no more demand to buy it. It's 5 times its fair value, all right. Okay, so in this strategy, we want to know where is the, okay, equilibrium, the dynamic equilibrium price level. We have the normal horizontal, okay, short-term equilibrium price level, which I've been talking about at 244 Trader YouTube channel, all right, and also on other channel, all right. The equilibrium price level, I have a formula, my own proprietary trading tool, a formula to calculate for any financial instrument the short-term equilibrium price level and the long-term equilibrium price level. Those are powerful key levels. Now, I'm revealing to traders how one can identify a dynamic, okay, a fair value. So you want to buy stock, all right? If you notice, for instance, that an asset is oversold, okay, this is what Mr. Warren Buffett has been doing before, a stock that is valued at $50, okay, fundamentals are still solid. This is very important. In normal conditions, fundamentals are still solid. Now the stock that is $50 is now at $10. Well, market environment is good. Okay, they are gaining more market share, they are making money. You'll be crazy not to buy that stock. So it is important first, so traders know about the book value for a stock, but there are other fair value that we call about equilibrium price level, dynamic fair value. So if you're in a financial market, you want to know, and you want to know how to trade it like a pro. Though I'm on a monthly chart, we can apply this strategy on any time frame, weekly chart, monthly chart, 2-hour time frame, hourly time frame, 30-minute time frame, all right, to pinpoint, okay, possible reversal point, okay, and also to set a target and to manage the trend and to see and to forecast what the price is likely to do. It makes sense? It is also a powerful. This is about a stock a trader explain a trend line stock a trading strategy. Happy trading to you all, and speak to you soon.